Hi there, this is the first in a series of topic videos looking at contestable markets. And in this introductory video, we will focus on some of the factors and impact on the contestability of a given market. The key thing is that contestable markets are constantly changing. We find them either to the micro, local level, regional, national, and increasingly at international level as part of globalization. Now, in a contestable market, the actual number of firms and their size is actually not particularly important. We give more focus, we give more weight, we give more emphasis to the credible threat of entry from a rival firm. And it's our contention that most markets are contestable to some degree. We'll think in this video about the factors that affect the strength of contestability in a market. Contestable markets was developed by an economist called Baumol in the early 1980s and developed further by other leading economists. And Baumol argued that the behavior of businesses is not determined just by the actual competition they face, but also by the potential competition. So let's think about the key conditions for a contestable market. Now, a market is perfectly contestable when there are no significant barriers to entry at all in the market. So therefore we say that there are no sunk costs, and we'll remind ourselves of sunk costs in just a few minutes. New entrants into the market, new competitors have similar information and they face similar costs to the existing firms. For example, they have access to all the available production technology. We assume that there's a fairly low rate of existing consumer loyalty, so that if a rival firm comes in, consumers are willing and able, if needs be, to switch their spending to a new firm. Generally, we think that there are low barriers to entry. So, for example, the hurdles of getting into the market are not significant. Fixed costs incurred by entrants could be recovered. There aren't significant regulatory and marketing hurdles to overcome. So if we have a contestable market, out there is a pool of potential new entrants who are willing and ready to stand ready to enter the market if the profit motive is sufficiently high. And a really good example of that would be the legions of app developers who are looking for new opportunities. Remember, in this market, in the contestable industry, there are no significant entry or exit costs. So the risk factor of entering the market is suitably low. Equal access to production technologies and high rates of switching. Now here are some key definitions which, if you want to take down for your revision notes, I'll just press the pause button and we'll still be waiting for you when you press go again. So a contestable market is defined as when an entrant has access to all production techniques available to the existing firm, they're known as the incumbent, and an entry decision can be reversed without cost. That means no sunk costs. In contestable markets, we think about something called hit and run entry. So there could be some temporarily high profits in the market and plenty of firms out there willing to have a go at entering the market, try to take some of the profits, and if it works, they can stay, but if it doesn't work, they can run and leave quickly. This is a market where the sunk costs are low or non-existent. Sunk costs are costs that can't be recovered if a business decides ultimately to leave or exit the industry. When there are sunk costs, a market is less contestable. Here are some examples, I think, of good topical contemporary industries where contestability is increasing. In the banking sector, we've seen the emergence of peer-to-peer lending. So businesses who finding it difficult to get corporate loans and finance from traditional sources, such as the high street banks, are increasingly turning to peer-to-peer lending networks. And one of the biggest is a business called Funding Circle. So I might lend £200 a month of my own money through the Funding Circle platform to businesses, large and small, typically smaller businesses, that need to raise money. In the fast food industry, there's been a wholesale infusion of new firms coming in. One of my particular favourites is a business called Five Guys. It makes some of the best burgers in town, and they've certainly got a different way of modelling, a business model for getting our customers into store and out again pretty quickly. Five Guys have been really successful. Airbnb, tremendously successful, rapidly expanding company, which is basically a platform for sharing people's spare rooms, really taking on the established monopolistic, oligopolistic power of the international hotel chains. Uber, of course, has made enormous waves in many cities in terms of challenging and in some cases breaking the monopoly power of the existing taxi companies. We're seeing increasing evidence of contestability in private education and also private universities. For example, the rapid rise to prominence of the business GEMS education. And even in the slightly boring, slightly safe world of book selling, we're seeing some increasing contestability, including Amazon deciding that they're going to open up their own bookshops. So there's plenty going on in contestable markets. Here's a really good example of contestability. Netflix is in a fierce battle for market share with the likes of iTunes and Amazon Prime. And in January 2016, they launched in over 130 different countries, although, of course, notably, they weren't allowed into China. Quick reminder of sunk costs. They're really important. So when sunk costs are high, the market is less contestable. When sunk costs are low or non-existent, the market is highly contestable. So sunk costs basically act as a barrier to entry because they increase the risk factor. Now, in lots of industries, fast food restaurants, pop-up sandwich bars which come from nowhere, hairdressing salons, local taxi companies, antique markets, the basic sunk costs are extremely low and market contestability is high. Here's our favourite video streaming business, Netflix again. Look at the growth of their revenue in millions of US dollars, surging through the $6 billion mark in 2015, and heading even higher as we speak. Here's a good example of contestable markets we've just mentioned before. Funding Circle is the peer-to-peer lending market. This is where people with spare cash come together and offer loans to businesses who need money. On the left-hand side, you can see the amount of money lent by Funding Circle. From small beginnings, it's rising pretty quickly. And on the right-hand side, it shows the share of investors after fees and bad debts. In other words, after the loans have been repaid or not repaid. And you can see that the investor return is pretty decent, actually. The average return for an investor is between 5 and 8%, which, given what you're going to get if you put your money in the bank, is not a bad deal at all. So Funding Circle is one of those businesses that are creating some creative destruction in markets. They're not very big at the moment, but in theory, peer-to-peer lending could be a significant challenge to the commercial banks. Airbnb is an absolutely enormous business now, built on a simple idea that people have spare rooms which they can let out to people who want to come and stay in a local town or city or village even when they're on holiday. And it provides an alternative to the sort of multinational hotel chains. Their valuation has surged recently. Company valued in 2015, the latest round of funding, at over $25 billion US dollars. And if you look at New York City, which has nearly 100,000 hotel rooms, look at the rise of Airbnb. It now has over 12,000 rooms listed in New York City. So it's quite a significant competitive threat in an increasingly contestable market. And of course, we find other examples of contestability, even if you're focusing on the oligopolistic nature of the market. So at the moment, Samsung and Apple dominate the handset market in the UK, Nokia close third, Sony on the decline, and Research in Motion, which produces the BlackBerry, almost non-existent. I wonder how this chart will change in the next couple of years, particularly with the rise of the Chinese mobile phone makers, including Xiaomi, who are likely to become extremely big players in Western markets in the next few years. And here are some more examples of contestable markets in action. This gives you a feel and a flavour for the dynamic nature of the contestable markets we see. So Netflix announcing they're expanding their streaming service to 130 countries. Apple launching a peer-to-peer payment app, taking on the monopoly firm PayPal. Big changes in the low-cost fitness industry as more gyms set up. Amazon opening their own bricks and mortar store. Metro Bank trying to raise £1 billion to expand their high street banks. Sainsbury's investing in micro stores for busy shoppers in the increasingly contestable market for groceries. So what we've done in this short video is introduce you to contestable markets. Really key point is that the behaviour of firms is not determined by the actual competition, but by the potential competition, and that can be a significant driver of conduct and performance in these kind of industries. In the next video, we'll look at the analysis diagram that goes with contestable markets, and we'll explain why contestable markets are not the same as perfect competition, and whether or not contestability leads to increased efficiency. So thanks for joining me, and hope to see you again sometime soon.